Welcome to TradeTheMBI.com. This is John. This report is for the 7th, Monday, and well, look at that beautiful sideways. We've had a full reset. Now we've got a cross of the midterm buyers here in green on the DOC, softening of short-term buyers. It should be enough, though, to give a little impetus to the upside. The problem was that we never got the reset of the orange to give us a strong press through, which means we're just likely to choppy to slightly higher in this particular case. It wouldn't take much to see a turnaround in short-term buyers, which would really begin to lift things, or particularly cyan dips below red. The interesting thing is that we're so low with this as it is. Dip below the negative 7.5 is going to mean shorts are pretty much exhausted again, leaving nothing but buyers to have to push it. Now, we were expecting Monday to have a little bit of up press with new fund money coming in from around the 5th. Yeah, it's having a little bit of effect in pre-market. We'll see if that's sustainable. Now in NQ, likewise, look at these shakeouts are just weak. We started to see a buildup on the ES one. They're a little bit divergent in the sense that you have the weakness a little more pronounced in the NASDAQ, but the DOC is starting to look exactly the same on both. So that's actually a positive for continuity. The euro recovery from the other day just filled in a couple of the positive extreme, but still extraordinarily strong. But look at that huge spike. What did that get all the way to? 23. Crazy for that orange. So that was a pretty huge spike for the euro that caused it to come down just a fraction. It's been lofty territory for a while, but we've got cyan above zero. A little bit more effort by shorts to take an active aim, but this huge degree of money flowing to the euro, it's a crazy thing. Is there justification for it? No, and it's pretty clear indication that it's just central bank activity. Bonds, a little bit of a pullback in there. It's a bit of crazy exuberance. The GDP numbers suggesting some pretty robust growth. These levels are just ridiculously high given what we're seeing from turnaround in the economy. If we get another quarter of decent growth numbers, I think that you're going to see both oil as well as bonds fade on that, because that would force the Fed to actually get a little tighter. They were a little over aggressive to start with. I'm not sure that they're going to stop. They figure you might as well normalize while there's growth now, so that when things turn the other way, they've got a little latitude to do something. But not sure that it has the same impact that it used to. Right now, cheap money, people are able to put it into anything and go for free. We get some additional positive extremes on USO going all the way right back down to here. So a little bit further potential for a move down. But again, that ability for the U.S. to increase supply is always going to be in the back of the burner and putting pressure on it. But the key for us was to see growth increases in the GDP and then have it also reflect itself both in oil and it should be a downturn in bonds that we're not seeing as some fear, which is always healthy. Gold, a little bit of a retrace, a little DOC spread that happened instantly as we were popping up the other day, right into plus 13 range with the orange, and it gave back a little bit of it, but supporting decently on that. Now, it has moved into an oversold category already. The interesting part about this is that you've got a decent reset of both short-term buyers, not so much midterm. They're already still fading in a little bit more. So we'll see if there's a little bit more downside to that draft. I mentioned before that I was looking for something in the 50% range. I guess we could run a Fibonacci on there. See what that number is. We can take this right around here. So right around the 117 would be a 50% retrace. Just saying. It's a popular spot when you're looking at institutional setups. And here we are, pre-market, exactly where we were, high point Friday, and talk about a 0 day. I mean, that was just like, yeah, fine, the short signals worked. There wasn't enough range to do hardly anything with. Same thing with the buys, came up and then it just pretty much flattened out the rest of the day. And then pre-market obviously started with positive move in ASIN under red, so should continue for a little bit. We did have positive extremes there, so a little bit of backfill into that would not be out of the question. I think it's just an opportunity to capture a few shorts, a few that exist, and see about squeezing them. Mostly this is going to take new money to keep driving it, and there's been plenty of liquidity, so at this particular point, not a problem. We'll just keep following, and hopefully we get a little bit bigger ranges. A little bit of shock wave would be good, because anything that creates a little bit of disturbance certainly would give us a little better ranges, which would be nice. But it's what the market is giving us right now, and we have to deal with that. And once it changes, though, you got to be ready for it. And a lot of times they'll lull you into sleep here with some sideways, and then boom, we'll get a significant 30 to 40 point move. So I want to be ready for that one when it takes place. As always, though, continue to look for me on the Skype chat. Trade well.